Good afternoon, GCavaligos for HFT-BONDS Notes. Interesting day, month end, 10 years make new move highs, bonds match the old highs. I think we've been up to that 149.0506 level 3 or 4 times now, but didn't make a new high, and then we saw some selling again. If both contracts had made higher highs and closed lower like they are, I would be more of a raving bear at this point. You know, the market's had a vicious rally. I think, not vicious, but we've had a good rally, and it's taken a while. I think in the last month and a half, the 10-year rallied from 130 even all the way up to 133 and some change. Bonds rallied from 140 and a half all the way up to 149 and some change, 149 and a half, without really a big correction. I think the deepest corrective move we have was in the bonds, I think maybe 2 points, and in the 10-year a point. Maybe it's time for a corrective move. You know, some of the wave counts are showing the market in a 5th wave position, and we're due for a deeper corrective move now. Something that would take the bonds back down to the 145 and a half level, the 10-year back down to like 132 even, 132.10. You know, we're not looking for much, but we're looking for something. Tomorrow's May 1st, holidays in most of Europe. Fed meeting tomorrow afternoon at 1 o'clock. What else? I think the ADP data is tomorrow. The refunding announcement for next week is tomorrow, a day earlier than usual, so the WI starts trading tomorrow morning and they can start hedging the bonds and notes. Better volume today than yesterday on the down trade. I think, you know, people are long. It's the right way to be, and they're taking some chips off the table here. I think it makes sense to be a little bit cautious going into the, you know, big events the next 3 days. Like I said, the FOMC tomorrow, ECB on Thursday, and then the non-farm payroll data on Friday. Those are all big levels, and we got to be aware of those levels in the back of our minds here, and be a little bit cautious with our long-term bullish outlooks here. So that's the layup. Short term, I want to sell rallies and buy dips. The 10-year did not take out yesterday's lows. The minor reversal days that we have today, all those are telling us is that we will retest today's lows, and we'll usually take out today's low by a little bit, minimum. So I'm looking to sell a rally. I think if 10 years can get back up towards that 16-18 area, bonds get back up around 148.20. I want to try and put some shorts on and look to cover on a lower low. So we're looking for the 10-year to take out 133.11. We're looking for the bonds to take out 148.09 by some degree. I think if you do get a short on tonight or tomorrow morning against those resistance levels, and we do take those lows out, you either cover a little bit or you move your stop down to protect your long. That's the way to play that. Sometimes these minor reversal days will turn into something bigger. We're not sure. That's why you run a trailing stop in case it does extend, you know, through these lows and keep going. I don't think that's going to happen. We have the new Fed buyback schedules out today. Fed's not buying tomorrow, and they're not buying on Friday. Their only buyback this week is Thursday. So we've lost some of that bullish support from the Fed that seems to give the market these morning upticks. So be careful trying the trade that we've been hammering the last couple days of buying that morning dip, selling it out into the buyback, and then either getting short or just getting flat at on those buyback rallies. So, all right, guys, game plan set. Ready? Go! All right, be prepared. Keep these levels in mind. Get my morning email. Support resistance levels every day. I expound further upon open interest and volume changes. You know, good stuff. And it's free, at least for 7 days. Or no, we're not doing that anymore. Sorry, no more free trials. Come and sign up. It's cheap. Have a great night, guys. I'll see you tomorrow morning.